BR Tax Code. What is it and why does it matter? A BR tax code stands for basic rate and means all your income from a particular source is taxed at 20%. This code is often used temporarily until your employer has all the necessary details to apply the correct income tax deductions. While a BR code isn't necessarily incorrect, it's crucial to verify that you're not overpaying income tax. HMRC, or Her Majesty's Revenue and Customs, may assign a BR code for several reasons. The most common is when your employer lacks sufficient information to provide the correct code. This typically occurs when starting a new job and can be resolved by submitting your last P45 to your new employer or by completing a starter checklist. Other reasons include transitioning from self-employment to payee employment or having additional income sources like a second job or pension. But what are the implications of a BR code? Normally, all taxpayers receive a tax-free personal allowance, which can change each tax year. You only start paying tax on earnings above this allowance. However, with a BR tax code, your entire salary is taxed at 20%, without considering your tax-free personal allowance. If you believe you shouldn't have a BR tax code, it's important to get it corrected promptly to avoid overpaying income tax. When your code is changed, any overpaid tax for that year is usually reimbursed through your salary. You might even be eligible for a refund if you've had a BR code during the past 4 tax years. To change your BR code, often all you need to do is provide your employer with your P45 or a completed starter checklist. If you're unsure why you have a BR code and haven't recently changed employers, contact HMRC directly. Explain that you'd like clarification on your BR tax code, and if it's incorrect, they can change it for you. This process is straightforward, and any overpaid income tax can be refunded after your new tax code is implemented by your employer. It's worth noting that there are variations of the BR code. The SBR tax code is essentially the same as BR, but is used specifically for Scottish taxpayers. You might also encounter BRW1 or BRM1 codes. The W1 or M1 edition indicates that your tax is calculated on a non-cumulative basis, either weekly or monthly. A word of caution for higher rate taxpayers. If you normally have a D0 tax code, but currently have a BR code, you might be underpaying tax. This is because you should be paying the higher rate on a portion of your salary, but the BR code only applies the basic rate. If you suspect this might be your situation, contact HMRC online as soon as possible to ensure your current tax code is accurate and avoid potential future tax liabilities. Understanding your tax code is crucial for ensuring you're paying the correct amount of tax. If you have a BR code, take the time to verify if it's appropriate for your situation. Don't hesitate to seek clarification from HMRC or your employer if you're unsure. Remember, staying informed about your tax affairs can potentially save you from overpaying or accumulating unexpected tax debts in the future. You can find out more about tax rebates and tax calculators at www.taxrebateservices.co.uk.